Rajiv Srivastava, Managing Director of Redington, joins us now. Let's take a conversation forward with him. Rajiv, good morning. Thank you for joining us. I'll
Good
get into
morning.
specifics of Redington with you, but before that, let's understand the demand and the supply scenario. Your business, in a sense, is a true representation of semiconductor shortage, logistics problems, availability of smartphones. What's happening on that front? And now that products are available, what is happening on the other front in terms of demand?
Okay, so, and that's a great question on demand supply and how it is manifesting itself right now. Clearly, the demand for technology in enterprises, SMBs, MSMEs, startups, government projects is very strong, very robust right now. As we shifted from work from home and learn from home, and people started to get back into offices, and organizations suddenly realized that they have equipment to catch up with, and that fueled a bunch of demand. The other thing which led to demand was the whole shift towards digitalization. Every company realizes now that if they don't have a very strong digital backbone, or they don't have projects which are transformative for their businesses in the digital space, it is very difficult for them to grow or very difficult for them to bring in operational efficiencies. And that again is fueling a whole range of demand. The demand has been soft in the last quarter in the home, both work from home and learn from home space, as you would expect. But given the trend of digitalization, given the acceleration towards becoming more efficient and more productive, we foresee a very robust demand in the enterprise, MSMEs, and the entire commercial space.
Your
The
revenues are.
supply chain,
Yes, please.
yeah, you also had a question on supply chain. The supply chain continues to be weaker in spots. The enterprise products, typically the networking products, are on real long lead cycle right now. The PCs, the notebooks, the smartphones have become better, servers have become better, but just the networking products are on very, very long lead cycles. So you are seeing that there are projects to be completed, but we don't have the complete portfolio to really deliver and execute those projects. So there's a bit of a mismatch in supply chain on the high-end products right now.
Are you saying that this quarter will be a slightly tough quarter? Because while we're discussing numbers for the quarter gone by, we're already halfway through the current quarter.
Yes, we are. And look, the way we are trying to pivot our business is have a very strong maniacal focus on the short run while trying to do everything possible to set up the company for long-term success. The way we are seeing the market situation evolve, the way we are seeing the demand for supply chain orchestration, that is driving strong demand and performance. So I think looking ahead to this quarter, I do anticipate a reasonable demand environment. And so we expect to sustain our revenue growth, and we expect to sustain profitability and margins from the recently implemented operating improvements that we made in the backdrop. And we are conscious and cognizant of the backdrop of geopolitical and financial uncertainty that envelopes the world right now. But we do see that this quarter, I think we've got a good situation going.
Rajiv, who better than you actually to answer this? What visibility do you have on whether or not Apple will continue to grow the way they are?
Look, Apple is a very strong and very smart company. They grow. We all see Apple as a phone company, but they grow across many, many different types of categories of products. They grow in phones, they grow in the MacBook, they grow in iPads, and they also grow a ton on the accessories and the services that they provide around the software products and the services of the products that they sell. So Apple has got a very diversified, very rich portfolio, which enables them to absorb shocks in case there is going to be a bit of a downside in any of the things, which we saw in the last couple of quarters. There was a downside in the supply chain. The phones were not available in adequate supply, but still Apple grew very fast, pretty much the fastest across all device providers. So I think the hedging of the portfolio, the balanced portfolio that they have, allows them to continue to grow. And I'm very bullish on Apple. They will continue to grow because they've got a range of products which pretty much meets the expectations of the consumers, of the enterprise, and very strong presence that they're trying to create in areas that they don't exist today. And so they're completing the product portfolio, they're managing the pricing waterfalls very well, and they're getting into segments of the market which they weren't present or so strong earlier. So I quite appreciate the way they're working.
Obviously, I'll be stretching too much if I ask you what's slated for the next 14 version of Apple, but we'll leave that for some other time. Just one thing, Rajiv, on your numbers. And what I see is that working capital has increased very sharply now to 28 days versus 18 in the first quarter. No one expected this to rise as sharply. What explains this, and what is it that you're, doing now as a strategy next?
Actually, the range of countries we operate in, India, Middle East, Africa, Turkey, and some of these countries are a real financial, somewhere there are financial issues and challenges. Some countries are very, very strong and coming across very well. The global situation is volatile right now. At the beginning of this quarter, when I did the same press analyst meet for last quarter, in at the results of when we did the results for Q4, we did guide the street that our working capital will be in the range of 28 to 35 days, and it has come bang in and I'm so happy it is at the lowest end of the quarter, at the lowest end of our guidance that we'd given. It is because there is the commodity prices are up, the interest rates are hardening up, uh, currency in a lot of the countries that we operate in is challenged, and there are obviously supply chain issues which are leading to delays. The mismatch of enterprise product supply chain itself adds a couple of days to the working capital. So we are not concerned at all. I think it's been a good situation because we came exactly at the bottom end of the guidance. Our receivable situation is extremely, extremely strong right now, and our account payables is higher than receivables. So I think we got a payables of 56, we got a receivables of 52, and inventory of 30. Receivables of 52, payables of 56, inventory of 32, net 28. And that is really a good situation to be in. I think, in our opinion, the way we are trying to think about ourselves over this course of this year, given all the volatility in the financial markets right now for the rest of the year, we would be anywhere in the range of 25 to 35 for this year.